Into Arabile, what's happening in our markets this afternoon?
Yeah, good afternoon, Zinga. Well, the market picture has been one, of course, that has focused a lot on that Chinese-US trade story and how things have continued to perhaps escalate, as one would call it. Yes, you've mentioned Huawei, but now Hikvision, which is a video surveillance company out of China, is also perhaps mooted to be part of what I'm calling the blacklist. They're coming through from the United States. It is, as the Citizen has put it then, the game of phones, and things are becoming perhaps a little more difficult to deal with when it comes to the market picture in relation to that. How exactly you trade is going to perhaps depend on your view on things and just exactly where you see the market going. So thus far, the market today is sitting marginally down, but it is mostly flat, some negativity filtering through into that market picture. So we'll get into the numbers as exactly how things are faring right now, and then we'll unpack the details in just a bit. Better sentiment there when it comes to how the oil situation is sitting below $72 a barrel. Some strength coming through as well then with South Africa's currency as well. So that will certainly boost market sentiment. But let's get a hold of how things have been faring even on the local front. Michael Traherne, Vestac Asset Management, joining us in studio here at the Johannesburg Stock Exchange. Michael, thank you so much for the time. Not really much to talk about when it comes to the JSE's movement today, but certainly a couple of earnings news coming out as well today, and that is bound to perhaps shape things a little bit when it comes to those.
Yeah, I mean, as between us here, we see the very red minus 11 for the SABC. They came out this morning before the market opening saying that their Lake Charles, so that's their US operations, but they've spent already $11.4 billion, not rands, dollars, creating an ethane cracker there, saying that it's probably going to cost an extra billion than they were forecasting. And if that doesn't make problems worse, it looks like some of the operational costs are going to be higher than expected as well. And the end result is higher investment, lower profitability means that lower return on investment for shareholders, and as a result, the stock's down quite a bit. They've
been struggling to, as they continue to try and diversify away from just being an oil company, which is what we've known them for. And this was meant to be perhaps the right step in that direction. It is, however, a stutter. Will it eventually pay fruit? And I suppose that's what investors are asking themselves. With the share price obviously going down, they're probably saying, yeah, I'm not so sure anymore.
Yeah, it's all around that uncertainty. I mean, when the project was first proposed, it was going to be very, very profitable. Since then, they've had building issues where some of the quality, there's been issues there, so they've had to scale back and repair things. Part of the extra billion that they're spending now is on remaking things that didn't work. On top of that, when they initially proposed this project, oil was around 100. Now oil's around 70. It's got as low as 30. So very much what is the cost of oil, what is the cost of natural gas in particular, and then that has a very big knock-on effect. So for now, I think long-term they're forecasting an extra $1.3 billion in profits for SABC, but only in 2023, roughly speaking. So long-term looks good, short-term shareholders saying we're not sure. You've taken on a lot of debt to do this project. Now we want to see the execution, and when you do execute it, we will re-rate your share higher again. But for now, it's wait and see.
A lot hinging on this deal. Another one with results out, there was Tiger Brands. They did miss their estimate with regards to their revenue there. Is it a company still struggling then from the drought, from all the things that have happened, and thus far are still unable to perhaps pick up the slack?
Yeah, I mean, it's a company that's been hit from all sides. I mean, last year they had the listeriosis outbreak, which doesn't help. As you mentioned, there was the droughts 2 years ago, which meant that their input costs were higher, and the consumer spending less. So they had a graph in their results presentation showing that the consumer is not only buying less items, they're spending less every month as well. And as a result, Tiger, who's very much in your face at a grocery store, is selling fewer products. And that brings revenues down, but it also means profits down quite significantly.
Long term, does this stay?
Yeah, so they look at their brands. They're number one in a lot of categories that they operate in. There's brands that I use because my parents used it and my kids will probably use it as well. So short-term pain, but I think long-term continue to pay a dividend and one for the bottom drawer you buy and you just forget about it.
There are ones that are sort of involved in the inflation price in some way, right? Because they're part of the fast-moving consumer goods segment there. Inflation coming in at 4.4%, better than the previous month's 4.5%. It won't necessarily help the South African Reserve Bank or force them to move in any direction, but it certainly does help that the figure remains below the midpoint.
Yeah, it shows just on the Tiger brands how difficult it is to pass on increased costs. So you've got increased salaries, increased inputs. They can't push that onto the consumer because the consumer's saying we're not going to pay that extra amount. Shifting gears to the Reserve Bank, Lesetja Kanyako coming out and say, market, you guys we're focusing on 4.5%, don't focus on the top end of the 6% range. So now that we're below 4.5%, it gives the Reserve Bank some room to move. But I think the volatility that we've seen in our currency and in the dollar and in oil, means that we won't see a rate cut tomorrow. But I think potentially towards the end of the year, particularly if the rand strengthens, maybe you get Ramaphoria 2.0, rand goes to 12. If the rand goes to 12, inflation comes down even more. These recent oil price hikes then aren't as impactful on inflation, and then you have very real reasons to drop interest.
We had a massive expectation that inflation would climb quite high. It didn't, though. And surely we should be getting some sort of reward for that.
So the Reserve Bank is cautious as opposed to being aggressive. They're saying we don't want to drop rates and then 6 months later have to increase them again because that just causes instability. It's not good for us as the consumers. It's not good for the consumer. They're saying we're going to take a wait-and-see approach. Until it's very, very clear that we have room to drop rates, we're not going to do it. The other thing benefiting the SARB is last year when they increased interest rates, they had the assumption that the US, China and Europe were going to increase interest rates a lot this year. All those economies are saying that's not going to happen. So looking good for a rate drop sometime in the next 18 months, I'd say, but dependent on oil and the exchange rate.
Very quickly as well, and very finally then, the US-China trade talks that continues to escalate in other ways now and hitting tech firms, Hikvision, Huawei. Do we see a resolution in that finally coming? Who has the resilience to take on, to last longer, shall we say?
Yes, I think the Chinese as a population probably have more resilience, remembering that Trump has an election to win next year, so he can't let this drag on too long. But if you look at both sides, these are more flesh wounds. They haven't gone the nuclear option yet, and that points towards both sides. Just demonstrating, flexing their muscles, wanting a deal but don't want to be pushed around too much. If they did go nuclear, that would be a problem, but we're not there yet. All things pointing towards a G20 meeting at the end of June between Xi and Trump to have a handshake and iron things out, and that's sort of where we're aiming at. Market's probably going to bob around until that's done. That risk is still very real until we have finality.
Oh boy, there's that and Theresa May, of course, in the mix, so certainly things are happening all across the board. Michael, appreciate the time though. Michael Traherne, their portfolio manager at Vestact Asset Management, as we unpack that market picture. Of course, a whole lot of news across the globe, including Asia. Here locally, that inflation data, as we noted, and even the results of Lewis coming out as well a little bit earlier on today. But a whole lot is still happening. Will the market close in the green? We'll get that a little bit later for you. But for now, that's where the buck stops. It's back to my colleague Nzinga right after the short break.